Hello traders, today is the 23rd of March. My name is Neville Hornsey, market analyst YouTrading. And today we're looking at the British pound versus the US dollar and its support and resistance levels. Okay, today I'm going to start with the economic calendar. We can see at midday today, we've got the Bank of England Governor Bailey speaking alongside Fed Chair Powell. And if we just go into the details, it's at the Bank of International Settlements at their Innovation Summit, and they'll be talking about the emerging challenges for central bank governors in a digital world. So be interested to see if they talk about the central bank digital currency and things like that. Then at 12:30, we've got Chancellor Rishi Sunak coming to the dispatch box to deliver the annual budget. And there is also talks of some other economic plans that might be unveiled. So the British pound versus the US dollar is going to be key in this afternoon. Going to the YouTrading.com Forex heat map, you can see here the bottom left-hand corner is not particularly solid green. There is a mixture within the commodity pairs. Top right-hand corner, obviously inverse. So fairly mixed sentiment. No real risk on, risk off, though. If you were to squint, you could say it's more risk on. Pound currently is weak, along with the euro. Australian dollar is pretty strong, along with the US dollar. All right, going to the active trader platform. Looking on the left-hand side, we've got the sentiment indicator. So 63% of traders are trying to go long. That's quite high. So we'll be looking to see if we can fade those guys. We're looking down, euro versus the pound. Euro looks like it wants to go longer. But obviously, again, that is an extreme number, 80%. So we're looking to fade that. So hence, euro, pound USD, not really giving a clear signal on direction. And then if you look to the euro versus the US dollar, it's pretty similar to the pound versus US dollar. So a lot of it will be dollar moves. And if we just look down to the dollar index here, 90% of traders are trying to go long. So if we just open up that chart, clear drawings. At the moment, they're on the right side of the trade. The monthly chart is obviously pushing up from the 96 level and it's sort of hovering around the 98 to 99. Haven't met the 100. So if I just go down to the hourly, you can see here that making higher highs and higher lows on the hourly. So got higher high, higher low. So we're just waiting to see if we can actually get above this market structure here. That would put pressure on the commodity pairs, put pressure on the pound and the euro. So we're looking for breakout, retest of that level, and then see if the dollar can get up to the 100. Now, the euro versus US dollar is the sort of largest component of the dollar index. And you can see here that on the hourly, euro versus US dollar broken through a trend line, obviously intraday trend line, starting from the 7th of March up to the height of the 17th. So pretty much most of March. We had a breakdown, retest, continuation. So that's a great trade. Normally, if you're looking for trend lines, I mean, it's great when price bounces off a trend line and takes up a new high. But what we teach is the breakout, a retest, and then continuation lower. And if you look to the left, there's not a lot of imbalances here, which haven't already been tested. So we could actually be coming down to this low over here. And then obviously maybe take out that retest and then continue for a classic retest there. So euro versus the US dollar does look like it's coming down. Obviously, if it was to pop back up, take out the highs here, there's obviously going to be some stops up there as price comes down here. Traders move their stops. So if we get back above there, then we take out the upside. So there's 2 to 3 sort of resistance lines here that you could draw across the tops of these candles. So if we get a breakout, retest, and continuation higher, that's the next possible. But if you are short, you need to be considering getting out here just in case it does go all the way back up above the 1.115. Right, going back to the British pound versus US dollar, I'm actually going to start on the monthly chart because we need to sort of see some context. Obviously, I'm thinking that we go lower today. If we were to put a few support and resistance lines up on the monthly chart, we've got the move down into 2016. Sorry, yeah, 2016, however you want to say it. We look to the left, we've got this April candle here. So we've got the low, and then we saw that acted as resistance several times. obviously trading within that range between 1.45 and 1.2. Did take out the liquidity that was below here. So if we just put this up, yeah, we have Brexit, come back up, found resistance at the breakout level, came back down, tested that low, made a double bottom. So when you get a double bottom, you get liquidity. We can see here that we had a bounce and then another push down. Obviously, pandemic took out the liquidity from this swing low here. Moving back up, found resistance again at the lows of April 2016. And now we're kind of just retracing here. So that's where we're at the moment. If we look to the left, we had a breaker structure, obviously. So we've got this line here. If price had broke out, retested, and then taken out the sort of stops above here, then that would have been a great trade. However, we now need to consider where the traders might be targeting. You know, are they going to come back down to try and close below the 1.2? Or is this breaker structure sort of more meaningful? And are we just looking for some sort of value and then some buying to pressure to come along? So if I just remove this, and pull that down here. So this was the breaker structure. And then if we look below that, we've got this red candle here. I'll make it green on the box to say that this is a potential demand. So these guys were selling back down into the highs here of April 2020 and May 2020. Then we had a big impulsive move to the upside. And then obviously we get into December 2021. We have a green candle on the first bank rate hike, and then we've had two subsequently since then, and we've seen pound come lower. So maybe traders are looking for somewhere to buy. On the monthly chart, there's no imbalances as such, so we're just waiting to see if the buying pressure that did actually come in here is still showing that buyers are around 1.3. Going down to the weekly chart, see if we can find something a bit clearer. Looking to the left, we've broken structure here on the weekly chart. So breakdown, obviously we're still continuing to go lower. So if we just put another thing on, so we've got a low here, a lower high, and now a lower low. So that's, you know, technically a downtrend. If we were to then look to see what we've just been testing above here, you know, we didn't come back up to test the 1.349 or 8 there. If we had, then we could say, you know, this little balance area here could be resistance, and that we could looking for a lower high to form and then come down. At the moment, what we have done is if I put a horizontal line up here, the 1.33 today acted as resistance, and we're sort of holding around last week's high. So waiting for the Bank of England governor to speak, waiting for the chancellor to speak, and sort of trapped between 1.315 and 1.33. So no trade to do here, but you know, currently the weekly chart shows a downtrend, but we're not at significant sort of resistance to sort of take a trade from. Going down to a daily. All right, so if we look to the left into this sort of area here, so this was the big move down that we sort of said, you know, could be possible sort of demand. Looking through all the highs here on the daily chart, you know, everything's been tested, so there's no imbalances. So if anything, there might actually be some stops underneath this low here, which means, you know, liquidity could be there, and then we could come back down and test this sort of level here around June 2020, or maybe even like July 2020, depending on if you want to sort of go for this swing low here or take that balance area there. So possibly sweep lower than the 1.26 down towards 1.24. Yeah, that's obviously quite a way away, but possible targets to the downside. On the daily chart, like I said, you know, we are making lower lows, lower highs. So technically downtrend still. Looking to the left, I was hoping to get a entry here at this low on 3rd of March. Didn't quite make it up there. Like I said, 1.33 got in the way. Now we're looking to see if we can take out this swing low here, because all of the highs of these daily candles have been tested before by the preceding candles. So there's no imbalances, no liquidity until we get back below 1.3 and then down below this low here. The 3 rate hikes haven't had the effect that the Bank of England might have wanted. But at the same time, we just trade what we see. Euro versus the pound, that's looking like it's found support at the highs of 7th of March. Next resistance of significance for me would be 0.835 and the low of 21st of March, maybe going up to the 18th of March and then up to the 0.838 sort of level. So I am expecting a bounce up in the euro versus the pound, but overall, waiting to see if this sort of retracement here comes down to 0.618, hit that high here. So I'm waiting to see if there is like a decent bullish impulsive move, big rejection from this level, or whether this is going to trap some longs and then come lower, because obviously the euro is being pushed around by what's happening in Ukraine. The euro versus the pound generally sort of, because it's pound cross, does go opposite to the pound versus US dollar. The euro versus US dollar does generally push most of the euro crosses around. So if the euro does go a lot lower today, then that could weigh on the euro versus the pound. If the pound versus US dollar goes lower, then this euro versus the pound sort of just goes sideways. Pound versus US dollar, probably going to go with dollar strength, pound and euro weakness. So if dollar's the dominant currency today, looking to see if we do get like a pop up into this balance area here, into that low from 3rd of March. If we were to get through that balance area, we've got this next sort of larger balance area, sort of from beginning of February until the end of February. So pretty much all of February there went sideways. So there is the possibility that we go up to 1.35. That gives us a chance to put a stop above this swing high up here, giving us plenty of room and a decent risk to reward to the downside. Can't take a short right now because, where do you put your stop? If I was to go short right now ahead of the news, obviously volatility is going to come into the market. Anything with a swing high would be considered a possible target. So assuming that we come up to the lows of 3rd of March, we could look for an entry there as close as possible and then put our stop above that balance area here, hoping that any sellers that were there before remain. And then we're looking for a 1 to 2 risk reward. That takes us down towards this swing low here. And if we were to then push down towards the sort of bottom of this demand zone, we could even be pushing for a risk to reward of 1 to 5, which is a great asymmetrical trade, assuming that we think the pound is going to go a lot lower. If we take out this swing high, then there's a possibility that there is a change in direction. So it would be a case of going lower low, lower high, lower low. If we were to break that market structure here, then we're looking for some sort of imbalance area between this low and then wherever we sort of stop. And then we could possibly do that and then go higher, taking out liquidity above these sort of larger swing highs up here. So you need to be open to that just in case Rishi Sunak or the Bank of England governor gives the market something to cheer about. But for me, I think the base case scenario is, we're looking for lower lows and a continuation of this downtrend. Okay, good luck today. Obviously, wait until after the news before you do anything. Keep your eyes and ears open for possible headline news to come out of Ukraine, and I'll speak to you again tomorrow.